Welcome to Explain the Charts, where we provide in-depth analysis of the most watched stocks on the market. Today is March 24th, 2026, and we are breaking down Tesla, ticker symbol Tesla. The stock closed today at $383.03, marking a slight gain of 0.57%. Before we look at the chart, we have to discuss the massive fundamental news shifting sentiment this week. The headline story is the Terafab project, a $25 billion joint venture between Tesla and SpaceX. This factory in Austin aims to revolutionize AI chip production for Tesla's humanoid robots and autonomous systems. Additionally, we are seeing a significant rebound in European sales, with car registrations up 12% year-over-year. However, a shadow looms as federal regulators have intensified their probe into the full self-driving system. The NHTSA has moved to an engineering analysis phase covering 3.2 million vehicles. This regulatory pressure follows 9 collisions linked to visibility issues in the FSD software. We are also hearing warnings from analysts like Gary Black regarding a potential SpaceX merger. Black suggests a merger could erase $750 billion in value due to conglomerate valuation rules. Competition is also heating up, with BYD tripling its European sales and Rivian-backed Robot Axis entering the fray. Tesla is effectively walking a tightrope between visionary growth and immediate regulatory hurdles. Looking at the daily chart for the start of 2026, we see a story of volatility and a recent attempt at a reversal. The stock faced a brutal slide in mid-March, culminating in a low of $364 on March 20th. If you look at the candle for last Friday, you can see a long lower wick, which often indicates strong buying pressure at lower levels. This level near 365 has acted as a crucial support zone for the bulls. The bounce we saw on Monday, March 23rd, was a direct response to the Terafab news and broader market optimism. Price gapped higher and managed to close back above the $380 mark. We are currently positioned just below the 20-day simple moving average, which is a key technical barrier. A daily close above the $400 level would likely signal a shift from bearish to bullish momentum. The volume during this recent bounce has been healthy, though not as explosive as some might hope. RSI is currently climbing out of the 30s, suggesting that the extreme oversold conditions are easing. Long-term traders should watch the $340 level as the ultimate line in the sand for support. Failure to hold that would open the door to the 200s, a range not seen since early last year. Let's zoom into the hourly data from the period of March 9th to March 11th to see how this volatility plays out. During this specific window, the stock experienced a sharp rally followed by a significant rejection. On March 11th, Tesla hit a local high of $416 before the momentum stalled. You can see how the hourly candles started to lose steam as we approached that 415 resistance zone. This zone is critical because it represents a heavy supply area where investors have previously sold into strength. Notice the pivot point around $395 where the price flipped between support and resistance. Technical indicators on the hourly time frame showed a bearish divergence right before the subsequent slide. This helps explain why the move to the 360s was so rapid once support broke. By studying these hourly swings, we can better predict where the current bounce might find friction. The 410 to 415 range remains the biggest hurdle for the bulls to overcome this month. Any retest of this area will require significant volume to break through. Without a fresh catalyst, we may see a period of sideways consolidation within this hourly range. Switching to the 15-minute chart, let's look at the intraday action from the last 2 sessions. The surge on March 23rd was characterized by a steady climb with very few pullbacks, indicating aggressive buying. Price action today, March 24th, has been much tighter as the market digests yesterday's gains. We spent most of the session consolidating within a $5 range between $378 and $383. This tight consolidation suggests that the market is waiting for the next piece of news before committing to a direction. Short-term support is sitting at the point of control near $380. If we lose $380, the stock might look to test the $375 level to find more buyers. On the upside, today's high of $387.48 is the immediate target. A 15-minute breakout above that high could trigger a rapid move toward the 395 resistance. Watch the VWAP level closely during the tomorrow morning's opening session. If the price holds above VWAP, the bias remains bullish for day traders. Conversely, a break below VWAP would suggest the bulls are losing control of the current bounce. To recap our analysis, Tesla is in a high-stakes tug-of-war between fundamental growth and regulatory risk. Key price levels to memorize are 365 for support and 400 for major resistance. I believe there is a 60% likelihood that Tesla continues its current recovery toward 420 by late April. This scenario is highly dependent on positive delivery numbers and no further negative news from the NHTSA. There is a 40% chance we see another leg down if the FSD engineering analysis results in a mandatory recall. A break below 365 would invalidate the bullish recovery thesis and likely lead to 340. Traders should also watch for the Dutch Vehicle Authority's decision on April 10th regarding FSD approval in Europe. This could be a massive catalyst for the stock and provide the narrative shift the bulls are looking for. Remember to watch the volume trends, as a breakout on low volume is often a trap. The broader market context and geopolitical tensions regarding Iran will also continue to influence TSLA's performance. Keep your position sizes manageable and always respect your stop losses in this volatile environment. Thank you for joining us on Explain the Charts for this in-depth look at Tesla. If you found this analysis helpful, please like the video and subscribe for more daily chart breakdowns. This content is for informational and educational purposes only and is not financial advice. Always do your own research and consult with a professional before making any investment decisions.